Good morning, good morning. Predicted Trades family. Hopefully everybody can see my screen, hear my voice. Just waiting a couple minutes to let people get in here. All right, thank you, Ty. Thank you, Star. Good to see you guys. So, overall thesis I wanted to cover today in prep. You know, we had our lows last week that we nailed that bottom and played calls up. And, you know, basically every pullback has been profit taking, right? We haven't broken this structure, this pattern, this trend, right? I drew some trend lines from the lows once we, got through this sharp oscillation down and up and started setting an uptrend. I drew a trend line from those lows. On Friday, we smacked that trend line and we kept going. We came back and almost smacked it and kept going. And then Sunday into Monday, we held and held and held. And then at open, slipped it a little just to tag this squeeze. That was the premise yesterday. That was kind of the thesis. If you missed prep yesterday, then please go back and rewatch it. In fact, any day that you guys miss prep, please go back and rewatch it. And even if you were there all day, please go back and rewatch it because we try to cover a thesis up and down. Yesterday's thesis was we should hold this trend line and keep bouncing. Overall, with all these squeezes that we had in place, we were setting up for more of a chop day, and that's what we got. I said that we need to hold this trend line to continue a reversion to the means, to the daily moving averages, and that we could slip outside of the trend line enough just to tag this squeeze bottom, but then we want to stay above the trend line. And that's basically what we got. We open, almost tag this squeeze top. And here I'll zoom in on just yesterday so we can see the candles a little better. Come on, there we go. So we almost hit squeeze top, providing a short to squeeze bottom, a little bounce, a double bottom so that we can hop in. We played those longs up to the squeeze top. We turned around and played shorts to the squeeze bottom. We turned around and played longs to VWAP and then to the squeeze top. Then we played some shorts again, and this is where I said we don't need to go to the squeeze bottom. We can base around VWAP and around our trend to head back up, which is what we did. Went back up and grinded into these clouds a little bit. As we got into these clouds, we had our daily 8, the daily 8 moving average right here on this blue line, and then we had a Keltner at this hashed line. And as we started to break above them, I said watch for a break back below them to short, since we are in squeeze tops. We broke through the first line, the daily Keltner. We went back for a retest of that daily Keltner, and when we failed to stay above it, that's when this hard sell happened into close. Where to? Right to our trend line for a bounce and a bounce and a settle, bounce, right? So this trend continued to provide us support to go up overnight. Overnight, just kept riding that trend line. So for my futures folks, these preps do still apply to futures and can be helpful. We have support going into the overnight. It's a long off of this every time we come back to test it. And you get this nice push and a fade into open, as is to be expected when we're running into all these squeeze tops. They are starting to open up and get thinner from high compression to low. So now they can fire to the upside a lot easier. Like I've said, when these squeezes are stacked and thick with red or orange, it's hard to get through them. It takes a lot of energy and time. They don't just open up immediately when we get above them. It takes time for them to open up. So we grind against them. We don't go to the bottom. We grind against them. They start to open up over time. That's what we're getting. So we are sitting at the top of a 2-hour squeeze. And that is the only squeeze we have on pretty much every index right now. So, thesis and upside and downside targets. ES is currently up 50 points on a 100-point ATR. We're at this 40.56. 50 points up from that, gets us back to this 4100, where the daily 8 is. The daily 21 sits up in our major zone around 41.36. We could really, if there's enough sentiment and buying in the market, get up to the mean today. It'll be a little over an ATR to get there, but that's not unheard of to go a little over an ATR. We do have a very key level here at this 40.56. It was the new low of year after we broke 41.01. So once we broke this was the new low of year. Obviously we've gone lower, so we've marked new ones, right? But 40.56 is a key level. If we slip that at open, there we go. If we slip that at open, it is very likely that we go back to tag this daily 8 and this Keltner, which have now crossed over each other. Not that that has huge significance, but they are stacked together. The 8 is now, now that we are above it, after rejecting and rejecting and rejecting, now that we're above it, this 8 needs to turn into support, and we need to push off of it to head up to this daily 15. Now, we could easily hold 40.56 and just keep trucking. But if we can't get through pre-market high, if we can't get through the 15, if we start to see rejection and roll back and lose 40.56, we are likely going to test 40.30, 40.32, which our trend line is now catching up to. So we have support. We got through resistance at the daily 8. It should now be support. Our support is stepping up. So these should be the lows today if we go to test them. And send us right back up to the squeeze top and the daily moving averages. Should we give these out? Chances are, since this is OpX week, this is a week when options expire, we will slip back into the range of the week. One thing I like to do is take Monday's low, connect it to Monday's high, and extend it through the week. So right now, that is the range of the week as set by Monday and Monday's high and low. And we're trying to break out of that range today. So let's see if pullbacks bounce at yesterday's high, slip into the range to catch support to move back out. If that support gives out, we are just likely going to slip back into range and chop, right? We do have a lot of Fed speakers today. Let me, where are you? There it is. Pull this over. So we have a few Fed speakers today. Bullard at 8 a.m. Bullard is more hawkish than most at the Fed. He has a chance to say something more extreme about rate hikes, but pretty much everyone else is going to follow what the meeting minutes say from FOMC. And Powell speaks at 2 o'clock. But at least we get all of these Fed speakers out of the way on Tuesday. And then we're pretty good for the rest of the week as far as economic stuff. Let me do a quick check on economic calendar. Tuesday, Fed speakers, retail sales. New housing starts. Jobless claims Thursday. Nothing on Friday. So, after we get through today and any potential curveballs from Fed, as long as everything that is said by them is in line with everything they've been saying that is expected, we should continue higher and get back to the daily mean, at least, right? Overall, we're in a bear market. And you can argue the points of, have we really hit true correction yet, which would really signify a bear market? Point being, we are below the daily moving averages, and every pop to them gets shorted, and every pop to them gets shorted, and now we're working to them. To me, that current structure is bearish. And we have a good bottom, that's why we're playing long back to the mean. We need to be ready for a rejection back to levels that we have visited. We also need to be prepared for it to get above the daily mean, kind of chop around a few levels before heading higher and moving back into a bullish sentiment. When we're bullish, we push off of the means and truck higher, and then we pull back and push off again. Just like when we're bearish, we fall under, pop to, reject, pop to, reject. So, let's see on the daily if we can get back above this key 4136, which now the 21 has caught up to. We still have the daily 50 way up above at 4,300, and the daily 200 still way up above around 4,450. So for today, we have our high from pre-market that we would need to take out before heading any higher. You know, what I try to explain every day is what I try to visualize could happen. We could base at this 40.56, take off to get through this pre-market high and keep going. We could pop two pre-market high and reject, fall through 56 to get support, and then head back up. We could fall through support, get a little bounce to yesterday's high or to 40.56, head through support, come back to test, head lower. All of these things are possible. That's why we try to envision, mark key levels, and be ready to react. Pulling back and bouncing at yesterday's high, at these supports, even at this 56, is going to provide some longs to test highs overnight, to test daily moving averages, to test previous low of year. All right, moving on, NQ. Yeah, I think all this zone is last week's range, which we are nearing the top of. So, by comparison, ES is now outside of last week's range. If we go to Monday and Tuesday, okay, it just peaked out of last week's range. And now this week's range is inside of last week's range. Just something to keep an eye on. As we try to push higher, we're moving out of a range that we have been in and had a lot of price action. It's going to take energy to push us up to the next levels. If that energy doesn't come in the form of buyers with volume, we will just slip back into the range and hit key levels and bounce around. But ES at least peaking above last Monday's high and starting to slip back a little bit. NQ, by comparison, did not get through last week's high. It stopped right there and it's coming back. So, just levels to keep an eye on. Overall, kind of the same thesis. You should draw a trend line. And just connect it to that. We've got our trend line that should provide support so that we don't have to dive to the bottom of this squeeze. But ultimately, this squeeze does have its top at the top of our range and its bottom at the bottom of our range. Some folks pointed out that we kind of have an inverse head and shoulders. We've got a shoulder up here, we've got a head. So we've got patterns unfolding that should be sending us higher. We've got W's, multiple days where we drop again, not heading lower, so we start heading higher. But we got to get out of this range to truly complete the reversion to the mean up above. So let's see, as we are on a downtrend into open, sometimes we just need to recognize what the trend is, and maybe it puts it open to go down and hit support before heading higher. If NQ gives out this Keltner and daily 8, just like we talked about, we are above what we were rejecting. It needs to become support. So I expect at least this trajectory to land right about here and try to bounce and get back up through pre-market high. If it gives out this area, we're going back to test this trend line from the lows. Should that give out, squeeze bottom. Should we get above pre-market high, we've got the daily 15 as the next stop on a journey to get to the daily 21. The ready. The ready will likely be the first to arrive at the daily mean. And like I try to say, it can be an early warning. So let's see if the ready starts to bounce before it gets back to support and head higher, or if it just slips exactly to where it should. This daily Keltner, the hash line, the daily 8, our support that's coming up to meet from the trend line from the lows. So the low target around open should be about this 1790 area. And we should see a bounce. Should that give out, then we'll probably see all the indices roll back to yesterday's lows. YM. Oh, right now kind of the ready is leading at 1.8 versus the YM only at 1.14. So we could see rotation into small caps. If this is going to be a bottom and a move higher to the means. So on YM, just to compare, where's Monday on YM? So last Monday on YM, we are above that high. We have gotten above that high, and we keep trying to bounce and push above last week's high from Monday. We have Tuesday. So yeah, just go back to look at what was the range of last week. We're starting to break out of that and pull back and test. So basically, we need it to hold to continue moving higher out of this range. YM squeezes are getting so thin, they're basically not there. So YM really could just hold VWAP or this daily 8 and take off through to the mean. Let's see, YM is up a little over half an ATR, still got about, we'll just call it 300 and some odd in the tank. Yeah, it could get to the mean today. It will be a slightly above average ATR, but that's fine. So yeah, we could easily keep on going to the mean today on YM, on ES, and Q is a little far from its mean. So yeah. Apple. So Apple yesterday fell to that daily Keltner, held it and bounced, put in a higher low, kept trucking. Overall was pretty, was strong in tech. I mean, Microsoft was stronger, as we'll see, but Apple was not slipping and heading lower, at least, so it was keeping up with the pace of the market trying to move higher. We are up above yesterday's high, so keep an eye there for support. Should we slip, definitely want this trend line to hold. Otherwise, we will revisit the lows from yesterday. And one thing to note on Apple, because I've talked about how Apple can be very lucrative, especially for small accounts. One thing I wanted to show was, yesterday these 147s, 6s, 5s were not in the money, especially when we were down tapping 144. So at that point, these 47s, 46s were not in the money and maybe close to their beast, right? We could take a quick look, maybe drag these 47s over and see what we get. So there you go. Bounced repeatedly at our beast, or at our burger, with beast way lower. Let's see, they took these about $2 to almost 3 a couple of times and brought it back again to reload. Now we're getting a gap up. We'll be through yesterday's high. So, at least this one provided a 2 to 3 repeatedly. If we look at like this 150, it provided $1 to 150 repeatedly, and now it's going to open up above 2 most likely, with Beast down below. So, just one thing I wanted to point out as I was looking at Apple, this morning, I was like, oh, well, all those strikes weren't in the money, but now they are, so maybe that's something to share with folks. Go back to default. We'll go back to the names. So, Apple, want to see it hold above yesterday's high. If it slips, needs to hold this trend line. Because we need tech to keep moving higher, it does have some thicker squeezes that are still intact. 1 hour, 2 hour, and 4 hour. So this is probably the 2 hour. The 4 hour will be higher, yeah. So that 2 hour is pretty well established and thick. It will take time to get through it, but now that we're at it, let's just see if we can keep bouncing up to test it and push against it. Want this trend, basically this trend line is going to hold us up. We'll probably hit the cloud, hit the trend line, hit the cloud, hit the trend line, pushing against the cloud to open it and fire up. Otherwise, we'll keep rejecting the cloud, then go through this trend line and head back down. AMD, very strong at open yesterday. I talked about comparing last week on AMD with other names in tech. AMD was very strong and leading on Friday, so relative strength is there. It slipped, tapped our key levels, took off to our next, and then came back and hung out. But very strong opening drive, proving that chips are trying to lead, and AMD is trying to be one of them. We are about to arrive at the top of a daily squeeze on AMD. Yeah. And it's kind of a thick daily squeeze, so don't be shocked if we do get up to this 150 daily moving average at 101. We probably will hang out in this cloud. We could reject and slip back, but just like this cloud used to be thin and got thick, we need to push against it to get it thin again and able to fire to the upside. So on AMD today, watch this 96 for support, this trend line, to get up to this daily squeeze and psychological 100. Amazon has a couple of squeezes in place. They aren't the cleanest, but you kind of have your range based on where those squeezes were. This 2200, 2275. If we can break out above 2275, Amazon can get trucking. Still 130 point ATR, and it closed at that'll put it at like 350. Would be one ATR, and we have a daily Keltner and the daily 15 catching up to 2400. So, gonna keep an eye on those 2350s, 2400s, 2450s. Amazon could get back to the mean this week, as crazy as it sounds. 130 point ATR basically just needs to keep marching along. It's a couple day journey, but it can get there. I don't usually cover BA. Yeah, ugly and in a tight squeeze, so it's not going to be helping YM. It's down near the third Keltner. It had bad news, not touching it. Cat, ooh, look at Cat, making it back to the daily mean off of this 200 level. Last week, as we approached 200, I called out a number of times how 200 is a huge level on Cat. We should see support, and now we're back up near 212 and the daily mean. Cat's going to definitely help propel YM. So let's see, now that it's gapping outside of the squeeze, if it can stay there, or if it goes to fill the gap at least to yesterday's highs. Completely filling the gap would get it back to like 206, just to run back to 212. But overall strong and riding its uptrend. Cat. Facebook. You know, a lot of names in tech are still weak and under their daily mean. Facebook actually started recovering off of this attempt to fill the earnings gap. Earnings gap up, left a gap, slid into it a little bit. Now we're back above it. And we are back above 200. After getting through it, pulling back and testing it, now we're pushing off of 200 and moving higher. So relative strength, Facebook is pretty strong right now. It's trying to lead tech. Overall, let's see, we probably get a little pullback to the daily 21. And if we can hold there and head higher, that sets yet another higher low. Allowing us to move from the 21 up to the daily 50. This 205 going to be key. It is where we stopped yesterday. In fact, if you see my key levels, 95 was almost the low, 205 was the high. So got to get through that 205. That could cause a pullback to revisit maybe the daily 15, daily 21. Creating a nice zone of support right around 200. So just like we saw a pull back from, near 200 to 195, then we pushed to 205, closed around 200. We might see a pullback to 200 to get through 205 to get to 210. And downside, if it's strong and trying to lead tech, it's not usually my first choice to short. Google. So yeah, relative strength, guys, right? Google below the daily 21. Rejected the 15 and stayed below the daily 8 yesterday. It's going to be gapping above those, but this one's not showing strength. So if tech's going to roll over, here's a target, right? Something to short that is kind of weak already and getting dragged up by everything else. GS. Again, didn't look like a leader from yesterday as market tried to head higher. Looks like it was holding us back. We have some thick clouds in place, so even if GS starts to get going to the upside first, it will likely get stuffed and brought back. But it is in between the daily moving averages, so it could easily hit the cloud and maybe the 21 today, then just fall back to the 15 and the 8 and bounce around in there. But definitely if GS looks weak, it starts giving out yesterday's high. I mean, it's going to be dragging some stuff with it. JPM, not a huge interest. Very much the same thesis. Microsoft. Now, here's something that tried to lead yesterday, right? It dipped with everything it opened, but then it just raged all day until like the last hour. Then it took a break. So just like Facebook was nice and strong and above its daily moving average, or daily mean, daily 21, Microsoft showed strength yesterday and is getting close to that daily mean. Let's see how it deals with 270, the bottom of this old gap, as we approach it. But we do have a lot of squeezes in place, so Microsoft might not be leading. It might take some time to hit those squeezes and open them up before heading up with tech. Netflix. So, like I said before, and if you haven't looked at Netflix in a while, I've been saying don't touch it, right? Gaps down on earnings, don't touch it. It just basically went sideways until the next earning, gap down on earnings, right? And just like the last gap down, we go down a little bit, then we get pops, but we ultimately just stay in a range. We're going down, we're getting pops, but there's a range here about this 200 to 160 that Netflix could be stuck in until the next earnings. There's a pretty easy rule with Netflix: down on earnings, leave it alone for like 5 weeks. Then it can maybe pop and rally before the next earnings. Overall, this 200 and 205 is your major resistance right now. You can play it long, but there's a lot of folks that are waiting for it to rise to get out. So you'll run into a lot of sells. So overall, this isn't one I want to touch or trade, and I wouldn't advise it for you guys. When VIX is elevated like this, the market provides so much in SPYs and Qs. So, not going to be touching Netflix. NVIDIA. These squeezes are getting nice and thin. Got a good pop up, a little scoop back, and now we're pushing through those highs. Almost near last week's highs, which seem to overlap with the daily 15 and the top of the squeeze. So I wouldn't be surprised. It looks like NVIDIA wants to try to lead. Wouldn't be surprised for it to get near those highs and the squeeze top to take a little break and pull back before taking those out and heading higher. NVIDIA closed at 172, 13-point ATR. Get up near 190, which is where the daily mean is. So we could potentially see a strong day on NVIDIA today on these thin squeeze clouds to get through to the daily mean. I like NVIDIA today. Keep that one in focus. 190s, 200s, 195s, all good. QQQ. Nicely up above highs, but rejected last Monday's high pre-market. So need to get through that before trucking higher. And just like you see how we went in the overnight session up into these squeeze clouds, kept pushing into them, stayed in them for a while. They start opening, then you get a fade to hit support so that once we start to go back, they're pretty much thin or they disappear and we get through. This is very common for these squeezes. So basically for the Qs, for NVIDIA, for a lot of things today, as I put my cursor right here and you see all these highs that rejected, and we are now above, and as I put my cursor there, it overlaps this uptrend from the lows. Basically, we need to see NVIDIA hold about this 302. Getting down to 300, you're getting a little dicey, but I'd allow it just to head back up. But ultimately, we want to see it hold like this 301, 302 range. On the Qs, if we even get down there, you know, we could get a pop rejection of squeeze and pre-market high, head back to 302, 301. Don't want to see it go below that for continuation of the upside. Because, you know, starting to fall below that could establish a new trend and the end of the continuation. So that's why we talk about trends, trend lines, and most of the plays that we're talking about to the upside are continuation off of the lows of last week. Roku. Oh, Roku actually back to the daily mean. So for streamers, at least looking a little stronger relative strength. Roku caught a nice bounce, squeeze top, then it actually kind of grinded down all day. Back to the daily 8, daily 15, with a gap up with the market. This squeeze today is going to be very helpful. Wouldn't be surprised to see Roku take a dip, especially if the market does take a small dip to find support and partial fill the gap. Oh, excuse me. Ultimately, if Roku could stay above the daily 15, daily 8 little zone that's getting created down at the squeeze bottom, could provide a nice long from there through the daily 21 to the squeeze top and psychological 100. Shop, shop, shop. Rejected the daily 15, back below the daily 8. This thing is very, very weak and getting its butt kicked. It does have a split. Oh, darn it. It does have a split at the end of June. So let's see if they're trying to put in a bottom to take it back up before the split. We have Shop and Amazon split in June, so. And Ecom has been getting their butts kicked for some time. So if we are bottoming and getting back to the mean on the market, if we start to get above the mean and push higher, we could see Ecom really start to burst. And they're basically, it would just be a thesis of playing a run up into that split. Because after the split, it'll die and they'll leave it alone. Snow. Not a huge interest. I don't really enjoy snow when it's sub 200, so I'm going to leave this alone and kind of quit covering it in prep, but if someone wants me to, just chime in. SPX, going to be gapping up. ES up 65 points, so SPX should be kind of similar. It should be opening around 40.60. Up near the top of where these squeezes that set in are. SPX does not get squeezes that often. And even when it does get it, it doesn't always interact with them. But yesterday we did tap this one and a pull back into this wedge. Now we're going to be gapping above all that. So watch those highs because, doesn't necessarily have to fill the gap. It could just dip down to where there was price action, like these highs, and catch a bounce. So basically, if there is a dip, I want to see SPX hold its daily 8. Now that it's above it, just like everything else, this 40.30, 40.50 area. Hold that for a truck higher to the daily mean, which it could get to pretty much, yeah. No, today that would be like an ATR and a half. So probably a 2-day journey to get back to the mean on SPX. And SPX mean always sits a little higher than ES, especially when we're below it. SPY closed at 400, 10-point ATR. And the daily mean will step down a little bit. So yeah, SPY could easily get through the squeeze top. Uh, 410 going to be very key. Daily 15 is probably going to step down near today's highs from pre-market. So overall, let's see if there's some profit taking and some gap fill to yesterday's highs. Want to see us catch a bounce near the trend line, near yesterday's highs, near the daily 8, to head back up to the daily 15 in this 410. We could easily just open and pop right to it if we do. You could look for a short off of that, back to retest, then catch your long. But, you know, we do have a lot of Fed talking today. We could fizzle and just kind of stay in this new range that we've gapped up to. Or, you know, sometimes they just don't care. And Fed will talk today and they'll just do what they want. They'll rip it up, they'll dump it down, blah, blah, blah. And it could have nothing to do with anything that Fed says today. Sometimes there's already a plan underway. This Q, kind of trapped between 80 and 85 right now. Not getting a ton of volume or love, so I'm going to leave it alone for now. Tesla, Tesla, Tesla. Look at these key levels. Bounce up. Bounce between. Up to the next. Settle in between. Right back to that same level where we found support. Now we scoop back up. Basically, we're oscillating around this 744 with a high around 780, a low around 720. That is the range. We don't have really any squeezes except a 4-hour in place, which is way down at 700 and way up at 800, pretty much. And we'll be opening right at that 744. So if we can get going off of it, it's a decent long from 744 up to 780. If we lose it, it's a decent short from 744 down to 720, if that gives out to 700. But it was definitely weak yesterday and not helping the market. It just kept slipping. Sometimes that can just happen because volume's not coming in on the buy side, right? Buyers stepped in to bounce it up. Now they're taking a break and kind of lower volume, right, than the previous days. Just let it slide back to where buyers stepped in before to make sure they're still there. And last but not least, we'll check in on VIX and wrap this up because we're running a little over. VIX is firing these squeezes down. Yesterday, couldn't even get up to 30. Down, down, down. Big key level, or 25. And it's within range today. So let's see if VIX wants to pop 27, maybe fill the gap, 27.5. Or just die through the daily 21 to get down to 25. And you know, folks, when VIX is up here in the 30s in a squeeze like this, and then it breaks down below 31, below 30, we need to check ourselves on how much we want to short. I try to teach and preach in here that I don't ever come into the day wanting to go long or wanting to go short. I build my thesis. I react to what I see in front of me. Just like I've given a thesis on every one of these names, it should dip here. We should see support. It should bounce here. That's me saying I like to go long from this point. Now, I don't want to do anything. I just have a plan so that when we arrive, I know how to react, right? And right now, when VIX rejects 30 and does not get back to test it, because it's already rejected it, right? We need to maybe calm ourselves down on the short side of things and be picking up longs on pullbacks, right? So, that's my spiel for today. Good luck to everybody. I'll see you in the room. And let's get this market. Let's kill it today.